This is Ananias Edwards III, Unit 4 Project, PA 6304, Local Government Planning. And the topic of my project is on tax cuts in the Jobs Act. According to Trimmer and Grease 2018, President Donald Trump signed the Tax Cuts and Jobs Act on December 27, 2017. Since Donald Trump signed the Tax Cuts and Jobs Act, not-for-profit and tax-exempt organizations have been analyzing the impact to their entities. While the law has made wide-ranging implications, numerous provisions will specifically affect tax-exempt organizations, including public charities, social welfare organizations, colleges and universities, healthcare organizations, associations, and private foundations. Most citizens would gain some type of benefit from the change. The individual tax rates will change, and there will be an increase in the standard deduction. Married couples filing jointly will get an increase of $24,000, $18,000 per head of household, and $12,000 for individual filers. The estate tax exclusion doubles to $11.18 million. Limitations for cash contributions to public charities and private foundations has increased to 6% for the donor's gross income. Individuals who do not itemize see no benefit. Losses from one activity may not be duplicated or counted for another loss. 21% corporate tax rate will be in effect. Nonprofits that are deemed as corporations will receive a graduated tax rate up to a possible 35%, a UBI flat rate of 21%. Nonprofits that have income below $91,000 will face a tax increase. Tax-exempt organizations designated as a trust are not affected. An excise tax on compensation above $1 million for any employee, and this includes cash and non-cash benefits. Expenditures such as entertainment or club dues paid for the employee is not deductible for the employer. This TCJA will impact not-for-profit organizations in devastating ways. According to an article retrieved from the Financial Services Monitor Worldwide 2017, the Council on Foundations, National Council of Nonprofit, and Independent Sector today voiced united opposition to the Tax Cuts and Jobs Act. These groups are certain that the act will cause negative consequences to their communities in which they serve. According to Bajorkin 2018, financial experts are predicting provisions in the new Tax Cuts and Jobs Act could change how taxpayers plan to contribute to the charity year. Itemized deductions will decrease among households. There will more than likely be a reduction in giving. And there's also no incentive for giving. A reduction in constant flow of cash to these organizations. The importance of third sector organizations, there will be difficulty for charitable organizations to create a budget. Charity groups must work with taxpayers to find ways to donate and still receive a tax deduction. Uncertainty on how the act will impact giving options. According to an article retrieved from the National Council of Nonprofits 2017, the TCJA includes numerous provisions that will hurt the work of nonprofits. Special interest groups, along with the wealthy, benefit the most from the TCJA. The concerns of nonprofits were ignored. The ability of nonprofits to serve their communities will be hampered. Congress ignored charitable nonprofits when it inserted policy changes that would depress giving and kill nonprofit jobs. Attempts to politicize the 501c3 organizations against their wills, expanded the federal deficit, and tax exempts to provide huge tax cuts to wealthy corporations and individuals. The tax law will hurt those who depend on charitable nonprofits. There will be spending cuts that will cause organizations to turn people away. Programs will be discontinued, and organizations may close their doors permanently. Those who created the bill use tricks, gimmicks, and compromises that will cost billions of dollars in the future. Tax cuts for individuals are set to expire in 2025. The Johnson Amendment is not weakened or repealed. The tax law protection that prevents candidates for public office and their donors from coming after charitable nonprofits includes house of worship, foundations for endorsement, and other political campaign engagement. In conclusion, the act benefits the wealthy and big business, will hurt local communities and the citizens that nonprofits serve. It hurts nonprofit organizations, may cause some nonprofits to close or limit services, and may suppress charitable giving.